The deliberation pattern in trading signifies a potential shift from a bullish to a bearish market trend. This pattern is characterized by a series of candlesticks where the first two indicate strong buying interest with an uptrend, but the third suggests hesitation among traders, often marking the start of a trend reversal. The significance of identifying the deliberation pattern lies in its ability to signal a possible change in market sentiment before it fully manifests, giving traders an opportunity to realign their strategies accordingly. Traders are encouraged to practice recognizing and interpreting the deliberation pattern in their trading activities. This involves continuous learning and honing one's analytical skills to better understand market signals and responses. The process of identifying such patterns not only improves decision-making, but also enhances one's ability to anticipate market movements. Concluding, it is essential to realize that market analysis is a complex field requiring a multifaceted approach. Relying solely on the deliberation pattern or any single analytical tool may not suffice for informed trading decisions. Incorporating multiple analytical tools, which may include both technical and fundamental analysis techniques, will provide a more comprehensive market overview. This integrated approach allows for a well-rounded strategy, conducive to navigating the complexities of financial markets more effectively. Candlestick patterns are essential tools in the field of technical analysis, which investors use to interpret market sentiment and potential price movements based on past market data. These patterns are formed by the fluctuation in prices during a given time frame and are visually represented on a chart. Each candlestick provides information about the opening, highest, lowest, and closing prices of a financial instrument within that period. The Concealing Baby Swallow is identified as one of the rarer patterns within candlestick formations. Despite its infrequency, it holds significant importance for traders due to its role as a bearish continuation pattern. This means that when the pattern appears, it often signals that the current downtrend in the market is expected to continue. The pattern consists of 4 candles in a sequence. The first 2 candles are long black bodies, indicating a strong selling pressure. The third candle opens within the body of the second and is also black, but it lacks the lower shadow, suggesting that sellers are still in control, but buyers are attempting to resist. Finally, the fourth candle is a black body that engulfs the third candle and may also partially cover the second. This formation suggests that despite the buyer's attempts, the bearish sentiment remains strong, hinting at the continuation of the downward trend. For investors and traders, recognizing the Concealing Baby Swallow pattern on a chart means they should prepare for an ongoing decrease in prices. It advises caution for those thinking of buying and provides strategic information for those looking to sell or short sell the asset. The Concealing Baby Swallow is a specific candlestick pattern in the world of technical analysis that serves as a strong indicator of bearish continuation. This means it suggests that the current downtrend in the market is likely to continue. Understanding this pattern is crucial for investors and traders looking to make informed decisions based on chart analysis. The pattern consists of 4 candles in a specific formation. The first 2 candles are large and black, each representing a day where the market has moved downward significantly. Following these, the third candle is also black, but opens within the body of the second candle and is engulfed by a fourth, which is a doji. A doji is a candlestick with almost the same open and close price, indicating indecision in the market. However, in this context, it signifies bearish exhaustion. The fourth candle, the doji, is particularly significant as it needs to be found within the range of the third candle, but does not exceed its bounds. To visualize this without using images, imagine the first 2 days as consecutive slides down a hill, each day closing lower than it opened. On the third day, the market once again opens lower but manages to climb back up slightly, showing a glimmer of indecision or resistance. Then, on the fourth day, there is a clear struggle between buyers and sellers, indicating that despite a strong selling pressure earlier, buyers are trying to push back without much success. The significance of the concealing baby swallow lies in its rarity and the strong bearish market sentiment it confirms. When this pattern appears, it indicates that despite attempts by the bulls to regain some ground, the overarching momentum remains bearish. For traders, this pattern signals that it might not be the right time to enter into long positions, and for those already holding positions, to perhaps brace for continued downward movement or consider employing strategies to mitigate potential losses. In summary, the concealing baby swallow is a potent continuation pattern that serves as a harbinger of sustained bearish trends in the market. Recognizing this pattern allows traders to adjust their strategies in anticipation of continued downward movement. The concealing baby swallow is a strong bearish continuation pattern found in candlestick charting, typically signaling the further decline of a market. It is characterized by specific features related to the shape, size, color, and sequence of the candles, which play a crucial role in its identification and interpretation. This pattern consists of 4 candles. The first 2 candles are usually long black candles that follow a downtrend, indicating that the bearish sentiment remains strong. The third candle opens within the body of the second candle and is also a black candle, but it has a much smaller body and gape down. The fourth candle is unique because it opens within the third candle's body, but engulfs it by closing above the third candle's open. However, this fourth candle still does not emerge out of the shadow of the first 2 candles, remaining a black or filled candle, which confirms the continuation of the downtrend. The color of these candles is important, with the first 3 being black, indicating selling pressure, and the fourth, despite its unusual attempt to rise, still closing as a black candle. The significance of the pattern's position within a downtrend cannot be understated. For an accurate interpretation of the concealing baby swallow, it is essential that it appears after a clear and sustained decline in prices. This context establishes that the bearish momentum is strong. The occurrence of this pattern suggests that despite a brief attempt by buyers to push the price up, as indicated by the fourth candle's higher close compared to the third, sellers have regained control by the close of that session, hence signaling a continuation of the bearish trend. In real market conditions, identifying the concealing baby swallow involves observing for a sequence amidst a downturn where there appears to be a flicker of bullish activity, only for it to be overwhelmed by continued bearish sentiment. Chart examples, which in this context we are unable to provide, would typically illustrate this pattern occurring at the latter end of a downtrend, followed by a continuation of the price movement lower, thus serving as a harbinger of further declines. Visualizing this pattern without actual charts involves picturing 2 long days of price falls, succeeded by a small bearish attempt to recover that ultimately fails, all encapsulated within a broader context of downward price movement. This visual captures the essence of the concealing baby swallow and its significance as a signal for traders to anticipate a continuation of the downtrend. The concealing baby swallow is a pattern observed in the charts of financial markets, particularly in candlestick charting, that suggests a strong bearish sentiment among traders and investors. This pattern consists of 4 candles in a specific arrangement, highlighting the change in market sentiment from possibly bullish to strongly bearish. In the beginning, the pattern starts with a downward trend that is already in place, indicating that sellers have been in control. The first candle in the concealing baby swallow configuration is a large black candle, reflecting a day where the market has moved significantly lower. This is followed by a smaller black candle that gaps down from the first, showing the continuation of selling pressure but at a reduced intensity. The third and fourth candles are where the pattern gets its name and bearish sentiment becomes more evident. These candles are black and are completely contained within the range of the second candle, but with an important twist. The third candle begins to show a small recovery inside the body of the second candle, but without breaking its upper limit. The fourth candle, however, takes a unique position by opening within the third candle's body and being completely engulfed by it, hence the name concealing. This suggests that any attempt at recovery is quickly quashed by further selling, indicating a lack of confidence among buyers and a strong control by sellers. Therefore, the concealing baby swallow reflects a strong bearish sentiment as it signifies that even attempts at upward movement are being effectively suppressed by persistent selling pressure. The market sentiment is deeply pessimistic, and traders are likely preparing for the continuation of the downtrend. The psychology behind this pattern is rooted in the dominance of fear over greed, driving the expectation that prices will continue to fall, leading traders and investors to either sell off their positions to limit losses or refrain from making new purchases. In summary, the appearance of the concealing baby swallow pattern in a market chart is a vivid representation of bearish dominance. It suggests that the market is in a strong bearish trend with a potential continuation of the downtrend, guided by a trader psychology that is inclined towards expecting further declines in prices. The concealing baby swallow pattern is considered a strong bearish continuation indicator within the context of technical analysis in the stock market. Contrary to the occasional misconception that it might signal a reversal, its appearance is actually indicative of a prevailing downtrend likely to persist. This pattern emerges during a downtrend and is comprised of 4 candlesticks. The first 2 are long black-bodied candlesticks, reflecting days where the market closes lower than it opens, a bearish signal. The third candlestick opens within the body of the second, but has a small body, often a doji, a candlestick with a virtually identical open and close price, suggesting indecision. The fourth candlestick is where the pattern gets its name. It opens within the body of the third and is completely engulfed by it, often a sign of an impending continuation of the current trend, in this case, a downtrend. When considering chart examples, imagine examining a chart where this pattern appears after a prolonged period of falling prices. Leading up to the pattern, the consistent lower closings indicate that sellers are in control. After the concealing baby swallow forms, a further decrease in prices typically follows. The significance of such a pattern is amplified when occurring within a suitable market context, such as during periods of overall economic pessimism or reporting seasons with predominantly negative results. This is because technical patterns do not exist in isolation and are more reliable when supported by broader market sentiments or events. In essence, the concealing baby swallow pattern is a harbinger of continued bearish momentum, and traders often view its formation as an opportunity to either stay in or enter a short position, anticipating further declines. Understanding and recognizing these patterns, along with a comprehensive analysis of market conditions, can greatly aid investors in making informed trading decisions. To understand the implications of the concealing baby swallow pattern and how it signals a strong bearish continuation, it is pivotal to consider additional indicators or conditions like trading volume, nearby support levels, and the trend preceding the pattern. Trading volume plays a significant role in validating the concealing baby swallow pattern. A surge in trading volume on the days this pattern forms indicates strong investor participation and adds credibility to the bearish continuation. If the volume is notably higher than the average on these days, it underscores the bearish sentiment in the market. Nearby support levels are another critical aspect to consider. When this pattern forms above a well-established support level and the pattern's completion suggests a breakdown below this support, it provides further evidence of a bearish continuation. This breakdown through support typically prompts more selling, as it indicates that the market could not sustain prices above this level. The trend preceding the pattern is equally important. The concealing baby swallow pattern is most reliable when it occurs within an existing downtrend. The presence of this pattern in a downtrend means that the bearish sentiments prevailing in the market are likely to continue. It is an indication that sellers are still in control and that previous attempts by buyers to reverse the trend were unsuccessful. In conclusion, while the concealing baby swallow pattern itself is a strong indicator of bearish continuation, its implications are significantly reinforced when supported by high trading volume, the breakdown of nearby support levels, and a pre-existing downtrend. These factors together provide a more holistic view of market sentiments and help traders make more informed decisions. The concealing baby swallow is a pattern in technical analysis that indicates the continuation of a bearish trend, showing that despite temporary signs of reversal, the market is likely to continue in a downward trajectory. Historically, this pattern has been regarded as having a high level of accuracy in predicting the continuation of bearish market movements. This is because the pattern reflects a strong selling pressure that is not overtaken by buying momentum, even when there appears to be a momentary pause or slight reversal in the trend. However, it is important to acknowledge the limitations of relying solely on this pattern for making investment decisions. The financial markets are influenced by a myriad of factors, including economic indicators, political events, and psychological sentiment, which may not always be captured by technical patterns like the concealing baby swallow. Therefore, while this pattern may offer valuable insights into potential market movements, it should not be used in isolation. Investors are advised to corroborate the insights gained from the concealing baby swallow pattern with other analytical tools and methods. This can include fundamental analysis, which evaluates the economic and financial factors influencing a market or asset, as well as other technical indicators and patterns that can provide additional context or confirmation of trends. By employing a diversified analytical approach, investors can gain a more comprehensive view of the market, enabling them to make more informed and balanced investment decisions. Integrating the concealing baby swallow pattern with other technical analysis tools can significantly enhance the precision and reliability of a trading strategy. The concealing baby swallow is a strong bearish continuation pattern, suggesting that after its appearance, the market is likely to continue moving downwards. When combined with other indicators, traders can validate this prediction and refine their entry and exit points. One method to combine the concealing baby swallow pattern with other tools is through the use of the Relative Strength Index, RSI. The RSI measures the speed and change of price movements on a scale of 0 to 100. Generally, an RSI above 70 indicates that an asset is overbought, while an RSI below 30 suggests an asset is oversold. Therefore, if the RSI shows an overbought condition during or immediately after a concealing baby swallow pattern, it reinforces the bearish signal, indicating that a reversal downwards is likely imminent. Another useful tool is the Moving Average Convergence Divergence (MACD). The MACD is a trend-following momentum indicator that shows the relationship between two moving averages of an asset's price. A trader might wait for the MACD line to cross below the signal line after the appearance of the concealing baby swallow pattern as confirmation that the bearish momentum is increasing, supporting the decision to enter a short position. Fibonacci retracements can also be employed. This tool helps to identify potential support and resistance levels. After identifying a concealing baby swallow pattern, a trader could draw Fibonacci retracement levels from a recent high to a recent low. If the price begins to reverse and then stalls or reverses again near one of the Fibonacci levels, it could confirm the bearish continuation signaled by the initial pattern. For a real-world example, suppose a trader identifies a concealing baby swallow pattern on the daily chart of a stock. The RSI at this time might be showing a value of 72, indicating overbought conditions. Over the next few days, the MACD line crosses below the signal line, suggesting increasing bearish momentum. Additionally, the price hits a key Fibonacci retracement level and starts to decline. Together, these indicators not only validate the initial bearish signal provided by the concealing baby swallow pattern, but also provide the trader with a more nuanced view of market conditions, allowing for a more informed trade decision. This integration of technical analysis tools can help traders manage risk and improve the precision of their market entry and exit points. One common error traders make with the concealing baby swallow pattern is mistaking it for other bearish continuation patterns without carefully analyzing its unique characteristics. The concealing baby swallow consists of 4 candles in a downtrend, where the latter 2 candles are long black bodies that completely engulf the previous small-bodied candles, including shadows. This specific formation indicates a strong bearish continuation, but it's often confused with similar patterns that may not signify the same level of bearish sentiment. To improve pattern recognition and analytical skills, traders should focus on a few key tips. 1. Study the specifics of the pattern. Understand the formation's unique characteristics, including the sequence and types of candles involved. Each candle within the concealing baby swallow pattern plays a crucial role in confirming its presence and the bearish continuation. 2. Compare with historical data. Practice identifying the concealing baby swallow pattern in historical charts. This exercise helps in understanding how often it occurs and its reliability as a continuation signal. 3. Use technical indicators to confirm. While the pattern itself signals bearish continuation, using additional technical indicators can improve the accuracy of the prediction. Indicators like moving averages, relative strength index, RSI, and volume can provide extra confirmation of the trend. 4. Be mindful of the market context. The pattern's effectiveness can vary based on the overall market environment. It tends to be more reliable during strong downtrends. Understanding the broader market trends helps in making better informed decisions based on the pattern. 5. Practice patience and discipline. Learning to accurately identify and act on complex patterns like the concealing baby swallow requires time and practice. Patience in waiting for the pattern to fully form and discipline in adhering to pre-established trading plans are vital for success. By focusing on understanding the pattern's specifics, practicing with historical data, leveraging additional technical indicators, considering the market context, and maintaining patience and discipline, traders can enhance their ability to effectively use the concealing baby swallow pattern and improve their overall trading strategy. Employing the concealing baby swallow pattern in trading involves careful attention to detail and timing, given its indication of a potent continuation of a bearish trend. This pattern, observed in candlestick charts, typically signals that the downtrend is set to persist. Understanding how to set entry and exit points around this pattern can significantly enhance a trader's strategy. To leverage the concealing baby swallow, one should first confirm the pattern's completion, which involves a specific sequence of candlesticks. Following the identification of the pattern, a trader might consider entering a short position as the pattern suggests a forthcoming continuation of the downtrend. The entry point should ideally be set shortly after the pattern is confirmed, allowing the trader to capitalize on the continuing bearish momentum. Setting an exit point is equally crucial to maximize potential gains and minimize losses. Given the pattern's bearish continuation signal, the exit strategy should involve a stop-loss order placed above the highest point of the pattern to protect against unexpected reversals in the market trend. There are numerous case studies where traders have effectively utilized the concealing baby swallow in their strategies. One such story involves a trader who, after noting the pattern's formation on the chart of a declining stock, decided to enter a short position. The trader set a stop loss just above the pattern's formation and planned to exit the trade upon a predetermined percentage drop. The market continued to trend downwards as predicted by the pattern, allowing the trader to secure a profitable exit. Another case involved a trader using the pattern to add to an existing short position. This decision was based on the pattern's strong indication that the downtrend would accelerate. By carefully choosing their entry point following the pattern's confirmation and setting a strategic exit, this trader was able to significantly increase their returns on the initial investment. These stories highlight the value of understanding and applying technical analysis patterns like the concealing baby swallow. Traders who can identify and act upon such patterns with well-thought-out entry and exit strategies stand to benefit from the movements in the market that these patterns signal. The concealing baby swallow pattern is a rare but significant bearish continuation signal in the realm of candlestick charting, which signals the persistence of a downtrend. It consists of a sequence of 4 candles in a specific configuration. Understanding its variations and similar patterns is crucial for traders to adapt to different market conditions. One variation closely related to the concealing baby swallow is the bearish engulfing pattern. Unlike the concealing baby swallow, which involves a complex four-candle formation with specific characteristics in a downtrending market, the bearish engulfing pattern is simpler, consisting of just two candles. The first candle is smaller and is fully engulfed by the second, larger, bearish candle. This pattern indicates that selling pressure has overcome buying pressure, suggesting a continuation or initiation of a downtrend. Another pattern to consider is the three black crows, which showcases three consecutive long-bodied bearish candles, each closing lower than the previous one. While the concealing baby swallow signals bearish continuation amidst a downtrend through a specific candlestick sequence, the three black crows confirm the bearish sentiment without the preliminary setup, indicating strong seller control. The dark cloud cover is also related, formed by a bullish candle followed by a bearish candle that opens higher than the first candle's high but closes within its body. This pattern, while indicating a potential reversal or bearish continuation, varies from the concealing baby swallow by focusing on a shift in market sentiment within 2 days rather than the specific continuation context of a downtrend. In trading, recognizing these patterns and understanding their implications can greatly assist in decision making. For example, while examining a chart, identifying a bearish engulfing pattern might prompt a trader to prepare for a potential downtrend and plan their trades accordingly. Similarly, encountering the three black crows or the dark cloud cover could strengthen the case for a bearish market position, depending on the market context. Visual examples through charts enhance the understanding of these patterns. Imagine a chart presenting a downward trend interrupted by small bullish candles. This scene sets the stage for a potential concealing baby swallow if followed by the characteristic four-candle formation. Conversely, spotting two candles where the second significantly engulfs the first can quickly signal a bearish engulfing scenario. Identifying these variations and interpreting them in different market contexts are pivotal in navigating the complexities of trading successfully.